Home loans. Always pay your home loan first as a priority. It's probably going to be your largest amount of debt. Most people here will either have a home loan or at some stage in their life will have a home loan. You don't get any tax concessions, there's no advantages in holding that debt, so pay it off as quickly as you can. Home loan versus invest. I often come across people thinking, well, my home loan interest rate is 7%. With shares, property, over a longer term, I can get 10, 11, maybe even 12%. Why should I bother paying my home loan when I can put my money into those assets and get a greater return? I think it's important in that scenario to compare apples with apples. So your home loan is paid with after-tax dollars. You get paid by your employer, pay tax on that money, and then it's that money you use to repay your home loan. So it's with after-tax. As opposed to the 11 or 12% quoted with shares or property, which is a pre-tax amount. So you pay tax on those earnings in your tax return at the end of the year. So on a 40% tax bracket, an 11% share market return after 40% tax actually comes down to around about 7%. So now we're comparing apples with apples. We've got 7% on our home loan, 7% on the share market or property market. So what's going to be the best option? Still, in that scenario, you'd go your home loan. Why? Because it's a guaranteed return. You know it's going to be 7% year in, year out. You know if you pay it off, you're paying down the home loan. Shares, properties, yes, it might be 7% this year. Next year it might be 10%, it might be 5%, it might even be negative 5%. You just don't know. So I guess the risk-free option is to always pay down your home loan first. Fixed versus variable. I advocate a variable rate. That's the one that goes up and down with the cash rates, as opposed to fixed, where you're locking in an interest rate for a set period of time. Fixed rates are great if you need certainty. So you set your budget, things might be a little tight, or you just want to know how much is my mortgage going to cost me each month. I don't want to know about the ups and downs. I don't want to ride the wave. I just want to pay a set amount, go for a fixed rate. Don't go a fixed rate because you think, yep, I'm going to lock in this low rate, I'm going to beat the market. It just won't happen. Over a 15, 20, 30-year period you're holding that home loan, it'll average itself out so that a variable rate compared to a fixed rate will be about the same. You won't be able to beat the market, so go variable. And as I said before, pay your home loan first and pay extra to your home loan if you can. I've got an example here. It shows a $500,000 mortgage, 7% interest, so your payments will be about $3,300 per month. Over the course of the loan, you'll be paying back the bank $1.2 million. So $500,000 give back to the bank plus an extra $700,000 in interest costs. Now, if you put $100 extra per week towards your home loan, you can shave 8 years off. So as you can see, the red line runs out at 22 years, and more importantly, you're saving $220,000 in interest costs. So for that small amount, $100 extra per week, it really does add up over a long period of time for some significant savings.